You just joined. Welcome warm welcome to all participants. You're right here at our Blockchain Monday. Again, and for those of you that are not familiar with that, we are Hanseatic Blockchain Institute. We are an association that has been founded 2 years ago with the aim, first of all, to help networking within the area of blockchain enthusiasts, and then secondly, to spread the word of what blockchain technology does, what it can do, and or how it might impact our future life, and to play some role in helping that blockchain technology is moving in the right direction. That's essentially what we do, and we are always happy to have new members in our association. The good thing about a German Verein is that you can apply for membership, and then we are always open for people telling us that they have new ideas on what we should do, what we could do, willing to become a guest in one of our blockchain Mondays, and so on. So please get in touch with us, contact us, talk to us. And what we do since our foundation back in 2019 is that we have a weekly event called Blockchain Monday, which is today as well, which initially was a physical event, so we were meeting and having drinking a beer afterwards, which was quite nice in terms of networking, much better than this. However, we decided to move to a virtual format, which gives us the advantage to be able to invite speakers that are not in Hamburg, and we already had some speakers from Moscow, from Paris, from Tel Aviv, from London, and last week even from Malaysia and from Indonesia. And today it's Brussels, the capital of Europe, kind of. And we are very happy to have Robert Kopitsch here, an Austrian who decided to move to Brussels to, step into politics. I think we start. Welcome again to these that just stepped in over the last couple of minutes, and we will talk about what's happening on the EU level in terms of blockchain. And so, Robert, thank you for joining us, for being with us. Maybe you give us a short introduction on, first of all, how you came into the blockchain space, and secondly, maybe it's even more interesting to learn what makes you tick to, well, look after the politicians and to help them build right decisions.
Yeah, happy to do that. Thanks for having me. And it's a pity I cannot be there in person. I don't know if you listened in a bit earlier. I'm a big fan of Hamburg, so it's a great city. So I'm a bit jealous about you all being there and me in rainy Brussels right now. But, you know, it's the capital of Europe, and this is something I cannot change, and I embrace it. It also has a lot of upsides. And among others, it's the very vibrant policy environment we're actually all working in. And just to answer your question very quickly, how I ended up in the blockchain space, it's quite an interesting story, actually. A good friend of mine came across when we discussed some investment ideas, like that was ages ago, like 2015, I think, or something, or 14 even. And I said, like, hey, we should shift a bit into shares. That's what we should do. There's nothing to gain anymore at the banking space. And I was like, forget about shares, buy crypto. And I was like, what the hell are you talking about? And explained it to me, and explained the technology. And it was a growing friend circle that actually got more and more into the topic. And at some point I realized actually it's a very interesting space, and a very vibrant one as well, and with a lot of implications for the future economy. And from a political perspective, obviously, there's a lot to regulate, as the European Commission would say. So I already thought, like, that might be interesting space to work in. And you know, the years passed by, and it got bigger and more mature. And nowadays it's a $1 trillion sector, which is still not huge, but it's growing and growing. And I think people see more and more upside to the technology and what it brings. And regulators therefore look more into it. So that's also the reason. That's maybe just a quick overview. Do you mind if I share, because I prepared some slides, or should we keep it like this? Just, it's very high level, so just so people can.
I broke my glasses, and therefore I had to buy these €9 reading glasses. This does not look that proper because I have to use them this way.
Okay, let me try to share screen. So can everybody see that actually, or if you tell me? Okay. So just very quickly in a nutshell, you know what I just said. I was in my second job, basically. I'm working for a consulting firm called APCO. We're doing public affairs on a global scale, and I'm basically the head of finance and FinTech in Brussels. And in 2016, I realized that this topic picks up also slowly, you know, in policy circles, but there was no central point of contact. So we started organizing roundtables on a quarterly basis about, you know, first crypto assets, identity, energy applications, transport, healthcare, and so on. And the commission was always there, fully present, because we were basically the only place where they can talk about it with people from the industry. And time passed by, you know, and in 2018, there was still no entity that was representing the blockchain space, basically. And I discussed it with the commission back then in like early 2018. I was like, yeah, no, we can basically go to Microsoft or IBM or Barclays back then, which are the active players at European level that mentioned that or talk about it. And I thought, okay, then let's found an association ourselves. So that's what we did in the second half of 2018, and we launched it in November 2018, and we started with 5 members. Very small, but the ones that were really interested, and that some of them did it already in the US or in Asia, or they felt the need for it. And so what we started basically is to...
Members, because today you have quite some well-known members in your membership.
Yes, the founding members, so nowadays that's our membership, and the founding members included Block, which some might know through Matthew Rosek, who was just on the Forbes cover actually. Cardano was one of our founding members. Fetch AI was a founding member. Ripple was a founding member, and NEM. They unfortunately withdrew from Europe, or at least from the EU. So they're not part of the membership anymore, but that were basically the group that founded Blockchain for Europe. As you can see, we expanded quite a bit since then. All of the companies, and that's the one common denominator that we have, is that the reason of your existence has to be blockchain. So these are all companies that basically exist because of blockchain technology. So that's basically what we're doing, and we're doing it in 3 ways, basically. So we're doing it through 3 pillars. So the approach that we follow is basically through education, engagement with policymakers, and increasing the visibility of the sector and the players in it. And we structured that in the 3 probably themes, you would say: integrity, innovation, and empowerment. That's what we see blockchain technology can bring to the European economy and the EU and its citizens more broadly. And the education is very important because, as you probably all are aware yourself, is that there's a lot of misconceptions and misunderstanding floating around. In particular at the policy level, when you follow, for example, what just to give as a neutral example, I mean, you can judge if it's very bad or just a bit bad. Finance Minister Scholz, when he talks about, you know, crypto assets, or his French counterparts or Italians, and then you go to the technical level and you see that there's a big understanding in the meantime on some of these issues, but there's a huge disconnect between the technical layer and the political level, basically. And we try to bridge that through workshops, position papers, education videos, letters. So for example, we've published our working paper or research paper on the digital euro, and we send it to the whole Euro group. For the ones who don't know what the Euro group is, that's the committee of ministers of finance of the Eurozone, because they're discussing a digital euro right now, and we gave them a paper where they can maneuver or orchestrate basically through the options that are on the table, the needs that are out there for the industry. And so we spend a lot of time basically on educating policymakers. But we also do is we engage with them and try to convince them of viable solutions, not just for them and their political agenda, but also for the industry. I mean, I'll give you an example afterwards. But that's really a core pillar of the work we do at Blockchain for Europe. And the last one is the empowerment piece, where we try to increase the visibility about use cases that are out there through events, webinars, podcasts, social media, blog posts. So everything that is tangible. So the overarching or coherency in the work we do is we try to be tangible and pragmatic. So we don't spend endless time on writing position papers or reports or anything. We try to take what the membership is doing or what the industry is doing and present it in a way that then politicians or policymakers, regulators can take it and include it into their work, talk about it, and make it very digestible for them. Because if you start, for example, we tried that at the beginning to explain the difference between proof of work and proof of stake. 45 minutes later, they still complain about Bitcoin being so consuming so much of an energy consumer. And, you know, so we moved away to be very pragmatic and tangible, creating like talking points for them that they understand and that they can use, and rather use in a positive way, because sometimes the misconception leads to negative side effects, and that's what we're trying to avoid in the first place. So when you look then in the policy field that we are operating in, some of you might know this already, but I still want to just briefly flag this. There's 3 key institutions at the European level. It's the European Commission. It's the initiator of basically the legal system we're all are operating in. And then you have the 2 co-legislators, the European Parliament and the Council, and they work in different ways. So the Commission is very factually based, very straightforward. They're very trying to be helpful and mitigate all those parties in the process. Parliament, on the other side, is the voice of the people, as they always address themselves, which means that there's a big gap between the one that know things and the one that have no clue, like in society or in the people. So we spend a lot of time educating them, engaging with them. We're giving workshops to MEPs to help them understand what they're actually regulating, because sometimes the gap between what their work is and the knowledge that's based on, it's quite broad, and that's dangerous, as you can imagine, because there's the risk of making misconceptions and therefore running into assumptions that create dysfunctional regulation. On the council side, so that's basically where, for example, Germany comes in. They're very much facts and figures based. They're very political. So that's the part that have a good technical understanding on what's going on. So there are representatives in Germany's case of the BMF or the Ministry of Economy that come in then and, you know, act at European level. And together those 3 have to agree on a common approach to a regulation. So the Commission basically is the initiator and the moderator. Council, so the member states and the European Parliament come up with solutions, and they agree then on a common text, and then the Commission in a trilogue, that's the process that it's called, then tries to mitigate those positions and come with a conclusion, and that's the end result is what we then all have to apply at European level as a directive or a regulation. And to give you a very practical example that's directly related to that, you probably heard of MiCA already. So it's the Markets in Crypto Assets Regulation. So whenever you're a crypto asset service provider and issuer issuing crypto assets or utility tokens or e-money tokens or asset reference tokens, so all types of stable coins, for example, then you will be covered by this. And this is something the Commission came up with after quite a push by the industry, among others, us, to come up with a regulatory framework that will override the currently existing national frameworks that exist and create a lot of fragmentation and lack of legal certainty for a lot of players that want to move across Europe when it comes to legislation. So the aims are replacing the existing national frameworks, fully harmonize and directly applicable requirements for participants in this ecosystem, and then therefore aim to create legal certainty so that, for example, a German company could go to France and apply the same rules in France as in Germany or in Portugal or Luxembourg or Estonia or wherever. So there's a because it's a regulation, it would be basically an overarching European regulatory framework. And that's, if it's done right, very positive, because it enables to move around, as I mentioned, to use the same rules everywhere, and to therefore expand, grow, create jobs, and apply the same rules and structures that you use currently probably in Germany or countries, or wherever you're located in the EU, in other places as well. So that's a very important piece of legislation, as you can imagine, for us or for the whole industry. So we spend a lot of time on that. And there's a lot of details that you probably might care about. I'm happy to discuss them in more detail after I've finished. Just giving you this overview, and then happy to discuss all of that. So one of the things, and when you look at the key aspects of that, is basically the coverage, as I mentioned, of crypto asset services providers, or CASPs, as they're called, issuers of crypto assets operating in the EU. So some of you probably, and then also crypto assets that are not covered by existing financial regulations. So if you, for example, offering a tokenized security, that would fall under something called MiFID. That's the Market in Financial Instruments Directive, which is, as the name says, a directive, and therefore every member state has to apply it with in line with the national law, and therefore it creates a lot of fragmentation. So what the Commission, after a lot of thinking and discussing, did, and that's one of the most important things, is to take those out, because they are falling under existing regulation, and then create a regulation which creates this overarching scheme that makes it easier for entities to move around. And there's a number of definitions in there. Some of them I mentioned. I mean, the definition of DLTs in there, crypto assets are defined, utility tokens, and then the so-called stable coins, as they're classified in MiCA, as asset reference tokens and e-money tokens. In particular, e-money tokens is what we probably consider asset reference, stable coins, and the asset reference token is very much tailored to what the Libra basket is, or DM basket, as it was proposed by the DM Foundation, and created a lot of buzz and political backlash. So that's a very special case, I would say. Then there are some definitions. I'm happy to, if anybody has questions about those, to answer them. I don't want to go into detail, because I hope we can discuss some of those, and maybe if you have questions, to rather have you ask questions. And then that's probably the implications and risks. I think the most interesting for all of you as you run your businesses or are interested in those. So the implications, basically, as I mentioned, of MiCA are legal certainty for issuers and service providers. So that's the aim. Single market, obviously, for crypto assets, and then and ultimately to increase competitiveness, growth, and some kind of strategic autonomy, because another political aspect that flows into the whole debate that you have on a lot of files, not on the crypto assets piece as well, but you will hear it when you discuss CBDCs, for example. One of the driving forces right now to push the digital euro, for example, is to get an answer to what the Chinese are doing, and looking at what the US through their private initiatives are doing. So this is a big aspect of it. The risks that you obviously have currently as they stand is the lack of tech neutrality. So the definition of crypto assets is basically a tokenized asset on a blockchain or DLT, which raises a lot of questions about, but what if it existed before and just we put it on a blockchain? Why would we regulate it now? There's some questions and answers about that. So for example, and then others are like potential burdens for smaller issuers or any crypto asset service providers. And then there's a lack of clarity when it comes to DeFi. Some of the rules as they currently stand might include DeFi. Others might argue that they don't. And in the end, when you talk to the Commission, for example, they will say like, look, we haven't seen a project yet that is fully decentralized. So therefore, we don't even have this question, which raises probably some alarm bells with some of you, and not just some of you, but in general in the industry. And that's something that we're also trying to address and tackle. And then as a last point, besides MiCA, which I gave as an example, there's some other issues that probably are relevant to the blockchain industry. So the AML package, whoever dealt with KYC, or cares about AML rules, there's a review coming up in March or April. It's AML 6. If we're lucky, they will elevate it to a regulation level, which means that you only have to follow one rule and don't have to look in every country what it needs to be done. Then, as mentioned earlier, there's a decision to be made by the ECB in Q2, probably in May or June, on what kind of digital euro do we want or need. And that's something that will be discussed and we work on, for example. So we created or drafted a paper on the future of payments in a DLT-based European economy, which is basically a roadmap to how a digital euro should look like or could look like. And it includes from CBDCs to all types of bridging solutions and alternative solutions, depending on the industry you're in. But then the Data Act, which probably will cover a lot of blockchain companies as well. It's the business to government data sharing. So for example, if you have a blockchain solution that you provide to a government entity, then you will be covered by that. But also if you run some kind of smart contract system, that will be probably also relevant for you, because it will probably include a definition and application of this rules for these applications. And then last but not least, and that's a very timely issue, is as the European Union moves into the taxation space, there's now European debates to harmonize the taxation of crypto assets, holdings, and use of it. And Commission is currently in a consultation, so we're having discussions with them about this, for example, on how to engage with that. And yeah, and that's in a nutshell. Sorry for rushing through, but I really would like to hear your views and or hear any questions about any of this. The overview of what's going on in the European level. I hope it was concise and comprehensive. If something's not clear, please feel free to ask. Happy to answer any questions. And yeah, that's basically from my side in a hopefully digestible way on what's going on at European level and what we're doing. So back to you, Moritz.
Yeah, thank you. Great. I think you already touched on many aspects that I would of course, like to discuss in more detail. And so please, everybody, feel free to pose your questions or remarks in the chat as well. So maybe one thing that struck me when I first looked into the MiCAR document, because from my point of view, I like the potential of the perspective of blockchain, and I do strongly believe that for it to develop properly, we really need some space to be understood and to develop. And when I saw the MiCAR thing, I felt like, okay, the EU is just throwing so many paragraphs at everybody who is considering to build something on the blockchain, to make it impossible for startups to develop a system without spending lots of money for lawyers to set up a framework and all that. I mean, the UK, even prior to leaving the EU, started a sandbox system. From my point of view, MiCAR is the absolutely opposite of any sandbox. It's trying to just have everything ruled and defined so in tiny bits and pieces that it's not really fun to develop a business model that's MiCAR compliant. Well, is that your view as well?
Personally, I think something like MiCAR is very important for the industry as it is. And you know, when we discuss this with our members, and not only our members, but in general, I haven't heard anyone opposing the idea of some regulatory guidelines, let's call them like that. I mean, a regulation is then the next step, but everybody was happy to hear that there is some kind of a regional approach to this growing sector, because it solves a lot of issues. For example, if you cannot get funding or access to a bank account or something like that, that will be off the table now, because once you're a regulated entity, no bank in the world will or at least in Europe, will be in the position to say like, hey, we don't give you access to a bank account, which already created a lot of issues for a lot of entities. And we see this not only with small startups, but even with bigger players that come out of Asia, for example, the US, and that want to open up an account in Europe. For them, even it became sometimes an issue. And with this in place, for example, this is off the table. There's legal certainty. You're a regulated entity. It's much easier, you know, to get small things like that in place. But on the other side, there's obviously some risks about details, and some of the details I mentioned already. And there's one of the questions I've seen from Julia Hugentuber, I hope I pronounced this correctly, that asks about one of those issues, for example, so non-fungible tokens. And currently, and that's the irony of the approach that the Commission took. So the original idea was to take a very loose approach, a very soft touch approach, which we and others in the industry lobbied for quite some time to make it, you know, as high level of an approach as possible. Then Libra came around and everything became political. And then, you know, because the original proposal, for example, of the Commission didn't include such points like the asset reference tokens or the e-money tokens that were basically politically pushed into this. The original idea was to broadly define what a crypto asset is, and then regulate crypto asset service providers in a way that innovation can flourish, basically. And because of the political dimension, there was political pressure, there was more rules asked for, stable coins were in the scope, and so on and so on. And now DeFi more and more becomes into this as well. And one of the issues to address the question of Julia, for example, was that because of the breadth of the application of crypto assets, non-fungible tokens were covered. The question then is, do you really want to have tokenized books or tokenized vouchers or sneakers become financial instruments? Does this sound right to you? And in our case, the answer is quite easy. It's like, no, it's simply not making sense. And for example, one of the work streams we're currently working on is to create a list of exemptions for tokens or tokenized assets that shouldn't be included. You know, what if a lawyer or a consultant wants to tokenize its hours, or a hairdresser, or, you know, something similar? He would become, if he's part of a law firm and the law firm does this as a common practice, or a consultancy, or even a hairdresser chain, or, you know, or something else, they would become financial intermediaries from one day to another. And that makes no sense. And the same for personal insurances or any other services that are provided in a tokenized way. And, you know, there's a lot of fantasy to increase those, and think about very innovatively about those. And they shouldn't be part of that. If it's a tradable instrument, then it makes sense if it's part of a financial regulation, because it should cover tradable instruments. If you're simply an asset that is meant to be the right to access something, you know, like to take a book, again, or sneakers, it just gives you the right to access or basically receive an asset. And just because it's put on a blockchain, it shouldn't be a financial instrument. So that's something we're trying to raise awareness right now, and we're discussing this with the European Commission. They're quite aware of these kind of things. They're supporting that, and in the parliament, there's some understanding there, and in the member states as well. And, you know, there's countless other examples. For example, when it comes to fly miles or vouchers, you know, what if you get your vouchers in a tokenized way from your local supermarket chain? I mean, why should this be a financial instrument? And, you know, there's a lot of other examples that fall into this. So to answer your question, currently, yes, with some exceptions. I mean, the reach is important. So how many people had access to it and to who you can sell it or use it. So if it's something that's only between you and your bank, no. But anything else currently would fall under MiCAR.
And ask, maybe this is a problem from with what the EU is trying to do, because I mean, the smart thing about blockchain is really that it will enable us to have different worlds, so to say, to be connected. and to be able to have just a hairdresser's voucher to become something that is tradable and exchangeable on a, well, place, a marketplace that works similar to a traditional exchange and that does not need that level of regulatory environment. And so I personally feel that many of the bureaucrats in Brussels so much have the kind of old views on that, and the very moment one is telling them, okay, and then we have the intention to build a marketplace for this, they just say, okay, this is has to be regulated similar to MiFID. And sometimes one tends to say, hey, come on guys, it's just about a hairdresser's voucher, and this is not similar to a place where you're trading and exchanging derivatives on financial instruments. And maybe that, so hopefully it will create a common legislative environment, but the risk is that Germany or that Europe is building obstacles to kind of future development. So my question to you would be, if you compare where we stand as Europe, and you look at the US and then up to Asia, my impression is that the regulation, provided that MiCA comes into place, will be much stricter in Europe than it currently is in the US and particularly in Asia.
I mean, Asia is something different, I would say. First of all, I mean, depends on which country you're looking at. I mean, if you go to Singapore, you have completely rules than in China or Japan or Korea or Thailand. You know, it's like, it really depends on the market there. So it's a bit difficult to compare. With the US, it's different. The irony is that we have a lot, for example, a lot of US members, and they all come to Europe because they're frustrated with what's going on in the US. They don't get any legal certainty. And it's very difficult for them to expand, and they're looking into Europe for, you know, some guidance. I mean, the US is moving now slowly. I mean, now that Biden took up, I think there will be some change. The new head of the SEC is quite pro-crypto, for example. It doesn't mean that in his new role, he will follow the same principles. But you can see that there's some movement going on. And I think that MiCA definitely steered the Americans to also do something about the lack of clarity that they have there. And I would disagree that the commission doing the wrong thing. I think they just underestimated some of the details they put in there. And it's obviously not a perfect regulation. There's a lot of things that need to be addressed. But the general direction of the whole paper or the whole proposal is very positive. The problem that I rather see is that the political level gets involved on issues where they simply want to have their way, and therefore don't care so much about the technical details. And that's probably the biggest risk we have right now. I mean, I can give you an example. So we had a meeting with an MEP in the parliament, and we presented, you know, the amendments and the suggestions we had in mind for MiCA. And at some point, he just stopped the conversation and said, like, okay, that's all fine, guys, but how do we prevent DM from launching in Europe? And, you know, everybody was like, what the hell are you talking about? And he was dead serious about that. He literally went one by one to ask, like, hey, how can we stop this? And you know, first of all, we're not commenting on other people's projects. And secondly, you know, that was quite of a surprise, let's say, that the only thing he cared was how to prevent a certain product from launching in Europe. And, you know, the less they know, or the further away they're from the technical details, the more it becomes a discussion about what do we do with stable coins, and how should we address certain projects from big tech companies or others. And that's dangerous because it creates the risk of the industry becoming collateral damage of some political implications or views that in particular the big member states have, you know, like Germany, France, Italy, Spain. That's the ones that drive this politically. And there's a huge gap between in some countries, there's no technical expertise at all. I don't want to name and shame anyone, but one of the four basically have no technical expertise and still speak up very loudly. Others are better, but they approach it from a very old world approach. And then you have one or two that are a bit more open-minded, simply because either their industry is getting invaded by crypto people or blockchain people from other continents, or because they simply have a younger team in charge. Mostly it's a matter of age, to be honest. Once senior leadership reaches, I don't want to point to an age, but let's say above 55, to just randomly pick one, you can tell there's a change in mindset. Not always, and that's not, you know, general. I don't want to generalize, but you're definitely below that mark, so don't worry. That's really something where you can see the lack of willingness to even engage on this. You know, sometimes it's not even about, I don't know about it. It's like, I don't care what you're saying. And that's really, then it becomes frustrating and dangerous, because these are guys that are in charge of making decisions. And that's
the point of product, and the question relates to that. I mean, you briefly touched on the digital euro, and I think we already had sessions on digital euro, on the different ways one could imagine how a digital euro would might work. Nonetheless, the CBDC, to have these abbreviations, the central bank digital currencies. And I think there's another question about MiCA, its markets in crypto assets regulation. DeFi stands for decentralized finance, and AML stands for anti-money laundering, as a Geldwäschevermeidung. But coming back to the digital euro, I mean, what would you suspect? Will there be a common EU-wide initiative that's going to bring the digital euro into place, or will that be the more progressive member states that start their own project? Because there is no rule that says as an individual member state may not start its own initiative prior to the EU having their kind of common system.
I mean, there's a very clear rule, actually, because, you know, the only entity that can launch a digital euro is the ECB under request from the member states. So the Eurozone or the Eurogroup has to request this, basically based on the input from the ECB. Every other member state that is not part of the Eurozone, so let's take Sweden, because they're a very prominent example of already researching this, or any other, you know, Hungary is also not one, Poland is not one, and some others. I would have to look up the rest now. Denmark. So there's 19 Eurozone member states that basically cannot do their own projects. There are still some of the test balloons out there. You know, the French government has one that is a wholesale CBDC. Yeah. Lithuanians have one. The Germans look more into something retailish. The Dutch look into something completely without blockchain. And there's some initiatives, and this all comes together at the ECB level, basically. But in the end, it's a political decision if you want a digital euro. So the ECB is doing the research, and they're supposed to come out with it somewhere in April, May, and then in, I think, May, June, they will probably agree on a form of a digital euro. I mean, there's no reason in the world that should stop them from coming up with a solution. The question only probably is, in my opinion at least, what it will be. It will be probably very much cash-like, with limits to spending, limits to holding, and therefore, you know, be like a, I don't know, a bit of a different version than cash, to just still separate them. And in a number of member states, you know, in Germany is a good example, or Austria, where I'm from, people are still very keen to have cash, and therefore they will be very, and you can tell that with the speech they're already sending out or giving, to not substitute paper money or legal tender in paper form in any foreseeable future. And this is supposed to be more for limited use case.
Yeah, there's one of the questions, how CBDC in Europe will impact individuals in Europe. And my assumption would be it will be so highly regulated, the kind of formal, official, real digital euro, that the only advantage it can have is that it's programmable, so you can use digital euro in a smart contract, and you will have automatic transfers based on certain events and situations and so on. I think that's a smart part of it. But all the other aspects of setting up a kind of token models and tokenomics and being able to invest into the digital euro to participate in something, and all these options that you see today with other crypto assets that are emerging more and more will not be implemented in the digital euro.
I mean, to just address that, I think the the ECB is in a very difficult position, because, you know, there's an industry need for a CBDC. That is what you just described, basically. And on the other side, the ECB is not there to supplement the industry. They're just there to ensure financial stability and monetary sovereignty. So there's different layers to what the digital euro should look like. And I don't know if you cannot sleep, I would recommend you to read our report on that. That gives an overview of those potential solutions, and that there's not probably one solution, but depending on what you need, there will be different layers to it. There will be probably an overarching one with the digital euro issued by the ECB. Then you will have probably commercial bank money, or as in Germany it's called Giralgeld, on a token. And then you will have probably other private solutions that are linked to that. And some of them will be in the form of e-money tokens, as they're currently defined in the MiCAR, or others will be simply a legal tender as issued by the ECB. And I think all together will provide the solution that we as an economy need. So the industry needs the programmable euro, the citizen wants a cash-like digital euro, and the banks need a different type of digital euro, and all together will probably be then what we call the digital euro, and just in different formats, different ways to store it. You know, ones are in a wallet, others are digital accounts, and some we will never see because only machines will use them and their IoT economy. It's but it's a very interesting, very important topic. And I think something that we will be discussing in the next years, and it will be here to stay. And Germany is actually one of the front runners in this discussion. You have some very good experts here and academics. So one of them, Philipp Sandner, who's also part of our advisory council. He was actually leading the authorship of this report together with 3 other very distinguished experts. I really would recommend to read it. It gives you also an idea, if you're not an expert on the topic, to grasp some of the definitions and discussion points, and it's also something, you know, that we sent to the BIS, so the Bank for International Settlements, or to the ECB, and we got very positive feedback on the readability. So I would really recommend.
That's quite impressive what you have on your website. It's blockchain for Europe.eu, I think. And let's move quickly on the point strategy. And you mentioned that Germany was a front runner in defining, even one of our questions goes in this direction, publishing the blockchain strategy of the German government in 2019. And I think afterwards there has been a EU blockchain strategy. Is this all in line with everybody? I mean, looking at the first side of all these documents, it's so much we embrace blockchain and we believe it's a technology and we want to support startups and knowledge transfer and so on. And of course, we want to set up a a trustable, promoting legal certainty and all that. So is all Europe looking at the same and at the right aspects of blockchain, or are there many kind of different aspects and views when you look into the details?
Sorry, I didn't understand the last bit. If Europe is the same?
Details of the respective strategy papers. Is what Europe puts as their blockchain strategy, is it kind of going in the same direction as, for example, the German blockchain strategy, or other discrepancies in when you look into the details?
I mean, Germany is interesting because the German government actually invited us in early 2019 to sanity check their ideas with us. So we were in a room, I think, with like a dozen members of the BMF and the Bundesbank and BaFin, and they basically were throwing all their ideas at us, and we tried to give us comprehensive and coherent feedback to that. I mean, the difference is with Germany in particular is that they try to use old rules to apply it to new technology and new use cases, which to a certain extent will probably work. I'm not sure if it's the best solution. It's definitely a solution. I mean, Germany very much leaned in their approach to expanding MiFID and the rules out of MiFID to crypto assets, which you can argue is an easy way to do it, but it's also not a very lean one. I mean, MiFID is probably the worst regulation that you can or you need to deal with, because it's a very complex and very vast and very fragmented piece of legislation. It's a directive on top of it, so you have 27 interpretations of it. I mean, just in case you tokenize securities, for example, I mean, the definition of a security at European level diverges so much that they couldn't even agree to come up with a common definition for what a security is at European level, which already explains you probably why this is not the ideal solution. I mean, it's better than no solution. And in this case, I have to agree with the German government that it's probably better than nothing. But I think what MiCAR does and will improve is that, first of all, it's a regulation. Secondly, it will override German law in some of these aspects, at least, if not most of them, with what MiCAR will do. And I personally think it's a positive thing. You can obviously argue the opposite, but I think everything that makes it linear and more approachable and more European is better. And to answer the more European question about what the other strategies look like, to be honest, I think the European Blockchain Observatory published a good article or a good report about it. I can recommend you to read, where they compare basically on all the initiatives at European level on blockchain or crypto assets, AML and all those things. And most of the countries don't even have a strategy, to be honest. And you can see this in the discussion. It's basically 3 camps in the member states that have this discussion. It's like the big ones that I mentioned, you know, the big Eurozone ones. And then some of the smaller ones, you know, like Estonia, Lithuania, Slovenia, Austria, and some others that have a discussion. Then the ones that chime in and out on certain aspects, and then some of them that I don't want to say they don't care, but they have simply no expertise to even handle this. And therefore, it's a very heavy-handed discussion because it's very much driven by half a dozen or maybe 10 entities or countries, which most of them are very big and powerful anyway, and have very distinct approaches on how to handle those. I mean, to take Germany again, they're very much looking at this from an old world perspective, you know, MiFID, like how do we align it with what the banking regulation looks like, and old regulation. And, you know, when you explain token economy on the technical level, you get somewhere with that, but everything above that, you end up in discussions about monetary sovereignty or financial stability, or how banks would do that if they would issue that, or asset managers, which is not the wrong approach. It's just, you know, it just misses the point. I mean, because it's like you're trying to regulate a rocket with car regulation. I mean, it probably works till the rocket starts. Question then is, what do you do? Do you run after the rocket, or I mean, you know, it's not really feasible.
I think that's a very valid point, because if you look at the definitions within the BCAR, it starts with saying that each and every digital crypto asset needs to have an issuer. And then you start saying that common Bitcoin does not have an issuer because it's kind of issued by a decentralized community. And MiCAR does not even cover this aspect, even so it has 360 pages. That's quite impressive. Let's try to touch on the points that were mentioned in the chat and the question. So, I mean, who are the politicians or who has an impact on what the politicians do? And the question is, which of the large organizations, the Gemini, the Kraken, the Coinbase, the Binance, do they already have a voice that is heard from the EU Parliament, or who are the kind of the industry players that might have an impact and an interest to impact what's going to happen on a regulatory level in the EU?
I mean, some of the players that you mentioned are members of ours, for example, and they do some more, some less. Yeah. There's a general interest to deal with it because, you know, most of them operate, if not global, at least regionally, and therefore have an interest to legal certainty. You know, they don't want to apply in every member state for a license because they simply want to move fast. So a lot of them are not regulated right now, or only by AML and KYC rules, you know, to onboard their clients basically, but it's not clear yet on some other aspects what has to be done. And they're obviously monitoring that partly with us, for example. I mean, we're looking at this, that's basically our job, at this on a daily basis and discuss these things. And the other institutional players that are involved here is obviously the banking space in Europe is very strong. They have an interest. I mean, not everybody, obviously, but this is a growing number because they see some opportunities and obviously some risks. Insurance companies, to some extent, the big exchanges, you know, like Deutsche Börse or LSE or Natixis, for example, also, or I mean, that's not the stock exchange, but, you know, some other bigger players, they're looking into this because they see opportunities, Börse Stuttgart also, and so on, and some others. So there's quite some interest, but there's also interest from entities, and that's a growing thing, you know, like, as I think Julia asked this question about, you know, this non-fungible tokens that see they're covered by some of those rules, you know, like airlines, for example, or payments companies, or companies that provide reward systems or vouchers, or big platforms, you know, like Amazon or eBay, because, you know, if they sell tokenized assets on their platforms, then they become a financial market player, and they're probably not so keen on that. I mean, for some of those tokenized asset, it makes sense, and for some, again, to take the sneakers or book example, probably not. Yeah. So that's probably the players you'll see. Then you have obviously the ones that care about the data that is stored on the blockchain, you know, like Microsoft and or Facebook with some of their projects, and I mean, the number is just growing. Google, you know, basically everybody that has a plan or a product that is somewhat linked to it or to something similar. It's basically looking into the space.
But I think the interesting aspect is that I mean, the deeper you are into blockchain, the more you realize that this is a technology that is not only going to impact financial market services, but has so many other areas where it might have a significant impact. And interestingly, from a regulatory point of view, everybody is just focusing on, oh, are they replacing shares and securities, and this is something that's dangerous and where we have to define rules. But so many other areas, I think you see when you look at crypto custody, that this is something that has not yet been covered by European legislation, and the individual countries have to set up something. And then if you look at, for example, a decentralized database to be used as a proof or as evidence for something, is something which is cool application of blockchain. However, there's no kind of legislatory approach to that yet to be seen from my point of
view. Yeah, I mean, and I'm just looking at a question that I just saw in the chat, and I think that's a bit fitting there. Is like, why there's so little positive news about, you know, applications at European level? Somebody asked, sorry, what's Arvet? So Arvet, I think that partly has to do with the mentality that we have probably in at European level. that we like legal certainty, and the mentality is always that we rather not move before we know what the legal aspect of it is and what's the consequence of that. And then also probably the way how we engage on DeFi, I think, is a big aspect, that there's a lack of understanding. This is considered at a lot of levels like some kind of voodoo practice. The big exchanges, as you said yourself, they're mostly Asian or American. And the use cases that we would need in Europe are very much industry driven. And it's to a certain extent a mix of lack of funding, I think, that is available, and the mindset at senior level. If you go to the tech levels, also in the companies, you often see that they are happy and engaged and interested in this. And then the higher you move up, the less they want to take risks on, shifting the business away. And I had a discussion with a friend of mine, for example, lately, who works for SAP, and they're implementing blockchain solutions now. And if you're a blockchain purist, you would argue that's not blockchain. And so there's also a lot of use of products that supposed to be blockchain that might not be blockchain. And in Europe, it's still like a bit of a catch-up between what actually are we talking about and the openness to innovate. And we've done things for ages that works well. Like my favorite example always is the Sparkassen. Why would you change the Sparkassen system in Germany? Because we're doing it since 200 years and it always worked. And then you look at what's actually going on in the banking space, and you will realize that there's an end date to what they're doing right now. And just because you don't realize it and you're not talking about it doesn't mean it will not happen. And there's a lot of other examples, where you see that. So it's really a change of mindset that is also very important, I think, at European level. Sorry for distracting from your actual question, but I found this very important to address.
We just moved to the point where we can expect, apart from BCAR, and this touches on the point Dennis is asking, what additional regulations are coming up, or would you expect that are related to first of all, in principle, and then Dennis is talking about the tensions between the USDPR and blockchain technology itself. I think that's what you mean, Dennis, right?
Yeah, so other regulations, as I mentioned quickly in my presentation, that are relevant for the blockchain space will be, the update of the AML rules. I think that's very relevant. Then the Data Act, which probably will cover smart contracts and how data will be handled on a blockchain. And then everything related, to taxation probably is also something that will be relevant. Like how do you tax holdings of crypto assets, or payments with crypto assets, or giving salaries to employees in crypto assets? Should there be differences and different approaches and so on? I think that are the big issues that we will see in the future. And then also how platforms built on blockchain will be regulated. So the Digital Services Act already looks into this, for example. And then GDPR very specifically. There's obviously this right to be forgotten, which everybody knows is creating some kind of issue, or not really, depending on who you ask. That probably will be addressed in the review of GDPR. So there's certain things that will be addressed. I mean, the payment space might have some reviews that will touch upon blockchain, with the PSD2. There's a review coming up next year. And then the banking space on, about crypto assets holdings, capital requirements potentially. And, you will see slowly that in the reviews in the following years, there will be more and more focus on how to handle blockchain applications or crypto assets or crypto asset services providers at the European level.
Regarding the taxation issue, I recently heard that there's something in the making that will implement a reporting requirement for all crypto transactions, eventually lead to a system like the Kapitaltragssteuer, so that the financial authorities will be able to see who bought and sold what volume of crypto. And makes it much easier to detect taxation fraud. Is that true? Have you heard about it?
Actually, I can give you more detail about that even because, as I said, the Commission is already consulting specific players in this, and what they will focus on is the scope of the transactions that crypto asset intermediaries could report to tax authorities on, or categories of intermediaries that could be usefully be subject to reporting obligations, or in which formats, for example, information should be reported to tax authorities on transaction by transaction basis, or an aggregated basis, and then P2P reporting transactions. So that's what the Commission is focusing on actually when they're looking into these things. Question is what will end up then in reality and at which level. So it might be that the European Commission comes up with a tax proposal, and then every member state picks and chooses some of it and implements it at national level, because taxation is not a domain of the European Union. So therefore, it's basically always more of a proposal that then the member states pick up and include or implement themselves. So Germany might take all of that and say, like, look, what we agreed on European level, we just incorporate into German law, and then basically with every transaction that you make in crypto, you have to basically report that. If you're an intermediary or an entity that is licensed, and yeah, it's a bit early to say what they will do, but there's definitely movement there. It doesn't mean that it comes anytime soon. Taxation at European level always takes years because it's so complicated, and it has to be agreed on unanimously. And to agree between 27 member states can be quite difficult. I mean, some of you might remember the financial transaction tax, which was invented in 2010, and they're still discussing when to implement it and how. And the countries that are left, I think it's 9 or 10 countries now that will probably do that. And it's 10, 11 years after they started discussing it, simply because they couldn't reach an agreement, because, taxation is a very sensitive field. And that's why I wouldn't be too worried about crypto taxation anytime soon. I mean, it will come at some point, but I don't expect it to be happening in the next 2 or 3 years, to be honest. I mean, just my personal.
Okay, so my sources told me that we might expect already this to become in force over the course of the current year, that there will be some kind of reporting by intermediaries.
I mean, it might be different in member states, maybe, and I'm not following that, what the German government is thinking about this. They might come up with something this year, but it's something that will only be valid in Germany then. At European level, there's no way that there's something coming out this year. I mean, there might be a proposal by the end of the year, but definitely not something that is European-wide implemented, simply only because of the nature of it being a
taxation.
Yeah.
There's another question. What's your impression on how the European institutions approach a central CBD? Without glasses, it's really on distributed ledger technology. I think that's a broader question. If there's an overall, I mean, we touched on that with the digital euro, I think, right?
I mean, on CBDC, I think we will see very soon. So that's something we'll see in Q2 probably, what the approach will be. I mean, there was a record number of responses to the digital euro consultation of the ECB. I think it was like 8,000 responses or so. I mean, there was an all-time record, and shows the interest and need of a digital euro. And therefore, I'm pretty sure there will be some response very soon. On DLT or blockchain in general, currently, so Commission is pretty good. They're very open-minded. So if you ever want to have a positive discussion about blockchain technology at the EU level, I would recommend to go to the European Commission, especially in the units that deal with blockchain or crypto assets. Very smart, very well educated about this. And also their chief economist is a big fan of blockchain. Joachim Schwerin is actually German, I think. So in the Commission, the mindset of blockchain and applications via blockchain or DLT is quite positive. In the member states, again, it depends on the member state and the level of you're dealing with. And the parliament, yeah, it's a bit trickier, I would say. There's some big backlash based on some lack of understanding that is quite toxic. I mean, you have, as it's, you know, the representative of the people, you have from people who would like to ban crypto assets to the ones that would like to put it into monetary reserves of central banks, basically everything.
Yeah.
And the unfortunate thing is that with the leaving of the British, the interest in fintech in general, or the understanding of it and crypto assets reduced dramatically.
Yeah.
And the MEPs that were basically like flag bearers of the industry in the last term, either therefore left or moved on to other topics. I mean, there's like one or two that are left, but right now, Parliament is not the best place to talk crypto assets or blockchain. I mean, blockchain more, crypto assets less. But I encourage everybody to just reach out to your local MEP. I don't know, Hamburg has a representative as well, and maybe I'm actually relatively sure that he's sitting in the Econ, so the Economic Affairs Committee, and just discuss with him what you think. And I can only encourage you to do that. The more, the better, you know.
Just briefly on two more topics. The one is the question is about privacy coins. So is there a common view on privacy coins like Monero within the Commission? Do they want to ban it because they care about AML, or is some space where people accept that there's room and legitimate use?
I mean, that's a very interesting point. I mean, the probable answer you would get is that the ECB should be responsible to safeguarding privacy with the digital euro. Why do we need something else? If you have something to hide, you know, then it's probably criminal. That's the mindset that you will probably get. Right. On the other side, using cash is probably the biggest reason for money laundering out there, and nobody would call for the end of cash because of that. Or maybe some will. And they're not really in the focus right now. I mean, they're not really big enough or relevant enough at the current stage to be part of this discussion, to be honest. I mean, they exist, but yeah, I mean, they're more, I mean, there's probably some people that would like to ban them, but they're not considered relevant enough to even move anything, you know. I mean, the crypto space, when you look at the market cap right now, I mean, it's at 1.2 trillion or so. I mean, that's like half the value of Apple or Microsoft or so. I mean, you know, it's still a very small sector, although that sounds like a lot of money, and it is a lot of money. It's still nowhere close to any place that we want to be or the industry want to be with this. So, I mean, we're moving there slowly and steadily, but, you know, it's still a way to go until people will start thinking about specific use cases or crypto assets before they will think about if to ban them or not. I mean, the only reason why they look at Diem is because, you know, one of the biggest companies in the world basically initiated it, and probably the one company with the worst reputation right now as well. So that's a combination that is not ideal for them, at least. For the sector, it was obviously a big driver to look into the space more and see why the hell they're doing this. Why there's such an uptake of an innovation driver. I mean, you can say about Facebook what you want, but they're definitely one of the more innovative companies. And therefore, people also look at it from this perspective. So it had a lot of positive side effects as well.
Last point I want to touch on, we briefly spoke about DeFi, and 2 weeks ago we had a Blockchain Monday where we were able to dig a little bit deeper into DeFi and learn not only Uniswap, but the individuals can provide liquidity to an exchange, that you can use a lending platform to pay interest, to get interest, and that there are even more kind of specific applications where you can build a whole financial market just based on smart contracts, which is crazy and interesting from my point of view. So my impression is that all politicians have not yet understood what is going to happen in this space and what might come up, or is there anyone in the EU that has a vision on if DeFi is good and how the EU should position itself towards this trend that's growing and growing and might become pretty relevant soon?
I mean, that's a very good point. And I would, if I look at the space, and, you know, we spend a lot of time on this, one of our advisory council members drafted probably the go-to paper on DeFi. So if you're interested in DeFi, reading, it's a paper from the University of Basel from Fabian Scher. It's called even DeFi or Decentralized Finance. And we're currently testing the waters a bit with that. And and I don't want to underestimate that, but I think the people that know what DeFi wants to be, you can count them on a hand. And the ones that understand what DeFi is, it's probably one person at the EU level, I would say, that could probably give you a reasonable example of what it is. And not just what it's supposed to be, but what it is. The problem is that with a lot of other things in the space is that a lot of entities talk about themselves as DeFi and they're not, which makes it obviously a bit difficult for regulators to maneuver the space. And you know, Commission probably, if you answer them is like, what do you consider DeFi? Is like, we don't consider anything DeFi because so far we've found for every entity and every project an intermediary that we could make liable. And as long as that's the case, they don't care, which if you look at a lot of DeFi projects, they probably have an intermediary. You know, there is an entity that is issuing the coin and that invented the protocol and so on and so on. But there's also already a number of projects out there where you really don't have that anymore. You know, when an algorithm creates a smart contract and the smart contract issues something. I mean, it's a handful of them, but that's probably what would be real DeFi, where you cannot identify those intermediaries. But right now,
so many new animals that don't fit into the framework of even the MiCA. So the deposit token, for example, if you deposit something and you get just in exchange a token that permits that your token are returned to you, this is like a open market, and this is nothing you can just put into the existing framework of MiCA, and so I think we have to be prepared that in the future the reality will always be 2 or 3 years.
Yeah. I mean, we're focusing on that, for example. So on 15th of April, we have a webinar specifically about that with the European Commission, with Fabian, who drafted basically the only academic paper out there on DeFi right now, and with a regulator from Liechtenstein who were looking at this like 2 years ago and are currently looking at it. I mean, they're quite open-minded about it, and therefore we will have this discussion. You know, it's meant to be quite educational, because the problem with DeFi really is that everybody throws around this wording and nobody really explains it, and because most of the time people don't know what it is or cannot even explain it. And sometimes even the companies, it's very difficult for them to explain what they're doing, which is a bit ironic. And we just think that it's necessary, you know, if you want to have this discussion and make people aware, first you have to at least agree on a common ground on which you're discussing something, you know, otherwise you have 5 people discussing 5 things. And I think we should start with trying to at least broadly define what DeFi is. And to come back on the MiCA point that you made, currently, nearly every project that is considered to be DeFi would be regulated by MiCA, because the commission will always find somebody that is identifiable as an intermediary. Either it's the crypto exchange that runs or issues those or sells those tokens, or the one that drafted the white paper, or that issued the tokens into the web, or runs the protocol, or or holds the the irony is that people will probably call you out as not DeFi, although you say DeFi if you represent them on a panel, which is a bit weird, right? That you say like, hey, we represent DeFi, so you're the intermediary, right? It's like, no, we're not. It's like the blockchain stands for itself. It's like, yeah, but who are you representing then? It's like, yeah, the entity that worked on it. It's like, so you're the intermediary. It's like, it's a bit of a tricky thing for the DeFi space to be DeFi when they can speak on panels. And that's what the regulators always point to when they say like, look, they're not decentralized because there's the guy representing them at the conference. So how are they decentralized? And it's a valid point to an extent, but on the other side, that's also not how reality works. But just to give you an idea on how regulators sometimes nail down what kind of animal you are, and in this case, if you can speak on the conference, then you're not decentralized.
And make it accountable. Okay, Robert, I mean, we already are beyond our border of 2015. It was quite interesting to all attendees. Thank you very much for your questions, and Robert, thank you for your willingness to share your thoughts and ideas with us. And I think it was pretty insightful. And do hope and believe that everybody will take a look at your website, the blockchain for Europe.eu with 4 in between blockchain and Europe, because that's quite impressive what you provide there as material and background readings. Thank you to Brussels. Thanks for being with us, and looking forward to seeing all of you hopefully next week or next BloMo. And for now, tschüss.
Thanks, Moritz. Thanks for having me. And if anybody has questions, please shoot me a mail. You can find it on the website, or maybe Moritz can also provide it. Happy to get in touch if you have any questions. And thanks for having me again. And cheers, guys. Good luck to you all.
That's all.